One of the companies we invested in, people don't even know about this company, and it'll do $1 billion this month.
Jeff Booth is a visionary entrepreneur and author of the best-selling book, The Price of Tomorrow.
So in your Economics 10 class, you heard inflation was required, but no one ever asked why.
He believes that governments and central banks artificially inflate the economy through money printing, and he advocates for embracing deflation rather than fighting it.
We believe, and it's largely a belief, we only will spend because of inflation. But what does that say underneath that? Because inflation is actually theft. It's saying we will only spend if somebody steals our money and forces us to spend. But the free market doesn't look like that. The free market means everyone wins. You trade with people all over the world, and you'll trade with somebody you don't like in order to get more value. Bitcoin is healing the debt. It's removing the debt in El Salvador. They think they're going to be debt-free in 2029. Their bonds are now trading at par, right? It was going to go insolvent. And they said no to the IMF. And they said, we're putting Bitcoin in the balance sheet.
All right. Welcome back to another episode of reDeFined. I'm Jeremy Almond, your co-host, alongside Megan Guy. How you doing, Megan?
I'm good. Thank you.
And we're here today with an awesome guest. I've been looking forward to this for a while. Jeff Booth, who's an entrepreneur and exec, VC, and probably most importantly to me, he is got this really unique take on economics and deflation, and just an overall awesome person as you get to know Jeff. So stoked to have you here, Jeff.
Really great to be here, Jeremy. Yeah, thanks for having me, Jeremy, Megan.
Well, Jeff, so I kind of thought maybe we could just kick it off with the question that will probably be on everyone's mind, which is you've taken some interesting and kind of, I guess, unorthodox positions on deflation. And I think that's kind of what we wanted to talk about today. So maybe kind of set the table for us and just tell me why everything I learned in my Economics 10 class in college was wrong.
So in your Economics 10 class, nobody ever asked the underlying question on why you heard inflation was required, but no one ever asked why. Right, and everything was built up on top of a model that said inflation is required to live in a productive economy, and nobody ever teaches you why. And inflation is required for a debt-based or credit-based economy, because without inflation, the credit collapses. So that is largely true, and we live in that world, and we live in a world that's a credit-based economy. But if you ask a deeper question, why? It blows up that model. So I always start with a pretty simple fundamental first principle truth. The natural state of the free market is deflation. Every single person that I do that to nods their head. And why would that be true? Because we as users of products and services only use what gives us more value, and entrepreneurs compete with what was there before all over the world to give us more value. So if we are part of the decision and we use things that provide more value, the output of that has to be deflation. And that's a pretty simple concept when you say that. But the problem is it creates a cognitive dissonance in our mind, because we've never lived in a world that looks like that. Nobody has. In 5,000 years of human history, for any length of time, we've never lived in that. So all of our history books go back to an extractive system. And it's always been an extractive system. For some people to win, some people had to lose. But the free market doesn't look like that. The free market means everyone wins. You trade with people all over the world, and you'll trade with somebody you don't like in order to get more value.
I want to actually go a little bit slow right here because, Jeff, you're kind of like, yes, I'm nodding my head, but at the same time, I think like it might be non-obvious that technology is a deflationary force in general, right? So like this notion, that our iPhones over time carry, more storage, the, sensors get better, like Moore's law is ultimately like improving things, is true. We experience that like in our natural state where like, oh, for the same $500 or $1,000, my phone is getting better, for the same thing in my computer world, in the world of bits, I'm buying more things, right? With the same purchasing power. So we kind of think about that, but it's hard to abstract that from maybe the rest of the world.
Yeah. So this is where it's so hard, and that's why you have to stay in a first principle, right? instead of going back. Because what you just did is you compared, you trying to resolve the conflict from what I said by going back to the other system. And we measure a system problem from within the system. So if you're inside the system, every single measure within it, GDP, all of the goods that you service, all of those are within a system that's manipulating money. And it's true for the goods, even the computer goods that you buy that are deflationary, right? It's true for those. They would have faster deflation. Your iPhone wouldn't be $1,500. It would be $100 if the world was a free market. So you're measuring, and why does technology, why do some things move faster in that and some things move slower? Then you have to look at both different systems, or appear to look slower. I'm going to actually use appear because that's a better way to describe what's happening. Why does it appear to look like that? Because in measuring from that system, in economics, prices also fall to the marginal cost of production. And the marginal cost of production of a line of code created by another line of code, artificial intelligence, is zero. A marginal cost of production of a line of code, like a calculator app, is zero. So those things become free.
We see that certainly in bits.
Yeah.
Do you think that's true in atoms as well?
I think it's true in absolutely everything. I think it's true. It doesn't appear to be true because you're measuring from the fiat-based system. This is a measurement problem, and we're inside a system measuring all of the problems from within the system that's manipulating money, and all of the measures from within that system would be confusing.
So if we were measuring in a society that had orange rocks as the way that we would sort of measure the system, and those orange rocks were fixed, does everything become deflationary in that sense? So if we were just trading across orange rocks?
Nuanced question, because and it's a good question, but that would be tied into gold, right? That if you said orange rocks, it would be
Otherwise known as gold.
yeah, exactly. But the reason. So in 5,000 years of human history, we've never been able to stop us from centralizing money. Gold couldn't be moved around at the speed of light. You had to use a different paper instrument, a derivative instrument on top of the gold, because you couldn't shave off your gold and pay for your ice cream, right? As the economy expanded and global trade expanded. So you had to centralize it. And then the incentives of centralizing it, let's say a bank, Jeremy, if a bank said to you, I'm gonna lend out 2 times your gold, so I'm gonna fractionalize it because you never want it all at the same time. They could give you a higher interest rate than if they lent it 1 for 1. So the bank could be more profitable, you would use them. But then what would that create? Then another bank would say, I'm gonna fractionalize it by 30%, like I'm gonna lend it out 3 times. And another bank would lend it out 10 times. And the free market would move you, and you would, as a user, would go to who paid you the highest interest rate. And it would consolidate there, right? And as it consolidated there, then there would be fear and greed in markets. We would race and use all of this, and it would expand. And then it would contract, and the bank with the fractionalized by 10 to 1 wouldn't have your gold. So what would you do? As a user, you would go to the government to say, those bad people. And then that would centralize up higher. And gold always got centralized. And then the government starts to play the same game at the gold, right? It just moves higher and higher in the stack. And then they reprice the gold and they centralize it and they change the rules on gold. And they say, give me all your gold, right? Or like in 1933 or in 1971, we're going to reprice the gold, right? And throughout human history, it's exactly the same pattern because of the centralization.
Taking these thought experiments sort of to their ends, right, isn't part of the reason we want to be in an inflationary economy that actually encourages people to spend, right, when we're credit-based, as you've said. The challenge, I think, if you think about everything in a deflationary context, is I know that next year's iPhone is going to have even more storage, and it's probably going to be at the same price, and so I'm not going to buy an iPhone this year. I'm going to sit and wait. If all of the goods are decreasing in cost, in this context, like how do you actually get people spending money and having trade happen?
When I said cognitive dissonance, driving their belief of the world and why people wouldn't trade and you can't get an economy to run, your question actually is a perfect question into that. When Galileo invented the telescope to look out beyond the system everybody else was measuring in, and he realized that the Earth wasn't at the center of the universe, he would have looked like a crazy person because he was outside the system. Everybody else measuring from within the system, looking up at the skies, would say that would be wrong. And this is the same thing. A state change that is this big, that touches everything, is bound to have this massive confusion on the way through. So let's interrogate the thing you just said. We believe, and it's largely a belief, we only will spend because of inflation. But what does that say underneath that? Because inflation is actually theft. It's not the free market. It's actually somebody creating monetary units to make prices go up. So what is it actually saying? It's saying we will only spend if somebody steals our money and forces us to spend. So in Venezuela, where you have higher inflation, right? The faster they steal our money, the faster we have to spend it because it's toxic. And the faster we do that, because that rate of theft all over the world is, and we live on top of that rate of theft. Every single country stealing money at different rates. And look at high rates of theft. What happens to the country? So what would a society look like if everybody was acting in their best interests on top of a rate of theft? Who would win? Who would lose? And then ask the opposite question. You probably buy an iPhone every year or every 2 years. You buy food, right? You buy a new computer. We don't buy because the rate of theft. We shouldn't. We should buy when we feel like we want to buy, when the value hits something for us. So the economy doesn't go away. It just doesn't need a debt. It doesn't need a massive debt instrument manipulating money to force us to do something because of the forcing function. It's a total illusion from the existing system that we grew up in, that we parrot. Economists that are on top of this, that are in this control system, something that's actually nonsense, right? If you had a global free market, what it would mean is instead of extracting 500 million people, and at the top of that 500 million people, 15 people having all of the wealth, you have modern day slavery for 7.5 billion people. That they can't get the things that they want and everything else. You see that in the crisis of people getting on boats to come to North America, risks to their families. Because what would you do if you were living in poverty and everything else from an extractive monetary system? You would move your family, whatever it took, to get to the winning one that was stealing, right? And so all of the things we see in the world are a direct result of the manipulation of money and the theft of money. And it's getting worse and worse and worse, and we can feel it getting worse and worse and worse as we're ripping apart society from the very fabric. And people are complaining inside that system with each other, making that system stronger. In the opposite world we see, now remember, it's a thought experiment, then the free market 8 billion people would be in service of 8 billion people. The minds that we would unlock to compete for value for us, where you would have faster deflation and the output would be prices would fall, that you wouldn't have to work 2 jobs to try to keep up with the nonsense, would be so remarkable. It's actually hard to even describe from somebody measuring from the existing system.
We think those of us who are sitting in a nice, cushy, first world, like 3% is the right target, right? And it's a question of like, where does that come from? And I guess conceptually it comes from some GDP target or whatever. But yeah, you shook your head.
Do you know what it comes from? It comes from one simple thing. If somebody came into your house and stole 2% of your stuff every year, you wouldn't notice.
Yeah, it's literally, it's the rate at which we're okay with our, dollar devaluation. And I think one of the reasons why your point about it's relative, right? So, you and I, Jeff, have both spent a lot of time in kind of emerging markets. And what you see is, what's the first thing they do if you're somewhat sophisticated? Well, I take my salary and then I move it from pesos and then I move it to dollars because the sort of rate of theft or the rate of inflation is less. So for you feel like that's stable. Even if the dollar's moving up and down and the peso's moving up and down, it's your relative amount. And so I guess this gets into this question of like maybe the pivot here on like hard money is, is there something now that like is emerging in society that's above the, sort of dollar stabilization? So if the dollar is more stable relative to the peso, this notion that there's something that maybe sits above it. So like, how do you come to like Bitcoin as a useful asset, as actual money and a solution to like a free market moving towards deflation?
So let me just start with a couple of things, because this is so confusing. You have to almost go back and forth and say, and keep asking yourself, what would the world look like from measuring this one system? What would the world look like from the other system? And you have to stay there, right? And you have, because it's so hard to understand. And so instead of saying Bitcoin, say, and protocols don't come around very often. The internet was a protocol. The TCP/IP was the base layer of the protocol that was developed by DARPA in the 60s. It took 20 years till layer 4 HTTP came out, and another 20 years till your iPhone was on top of that, using the same protocol stack. And what does that say? What it says is protocols develop very slowly, with intention, and they're winner take all. There is no second internet. Right? There's no, you can be North Korea and say, my citizens can't be on the internet. You can't choose to not participate without participate. If you choose to not participate, you're not in it. Right? But it would also say because they don't come around very often, we would compare with them with technologies that come around more often. So we would think we could do a better Bitcoin, right? It would be natural to think that. And and a free market would naturally do that, as you created 20,000 other coins, because people on Bitcoin had the appearance of making all this money, right? So I'm going to make my next one. But what is actually happening is Bitcoin is the base layer of the protocol, and it's and that protocol is what created Bitcoin. Is the first time in human history we had something that was decentralized and secure, open, decentralized, and secure, and we should protect every one of those words. Open, anybody could use it. They didn't require a government to say yes to front. You could front run your government. You could front run institutions. Anybody in the world could use it. It was wide open. Decentralized, nobody could control it. Right? It would get so it was. You could have the most Bitcoin. Didn't matter. Nobody could control it. It was completely decentralized and secure. It couldn't be hacked. That would mean, for the first time in history as well, that we've never seen that. We always trusted institutions to protect us, and then those institutions end up hurting us. But so this was something very new and would be misunderstood. So from that position, and then because of the way of proof of work, it's bounded by energy. So you have a physics-backed system bounded by energy, right? And energy is a first principle of life that's decentralized and secure. And what's happening if you measure in Bitcoin is it resolves the paradox that I described before. We live in an inflationary system, but if the free market is deflation. And resolving that paradox is, if you measure in Bitcoin, all of your prices will fall forever. And if you measure other currencies in Bitcoin, you can see the relative debasement of every currency, right? You can see it against Bitcoin. The relative debasement of the US dollar against Bitcoin is less than Argentina and less than Venezuela. And you can see the relative debasement perfectly. If you measure this house I'm sitting in right now in Bitcoin, 4 years ago, this house was 100 Bitcoin. This house today is 15 Bitcoin. Even though in other system, the measurement from the other system, this house has gone up from $1.4 million to $2.1 million in the same piece. So what is that saying? All prices on the energy-backed decentralized secure protocol are falling. It's the free market imposing this. And it doesn't care what I just said. It doesn't care about you, me, and it doesn't care. It's imposing this. Now, all of the people that are buying houses, what are they doing, and why are our systems degrading? Because what they're saying is, I can't store my money in cash. I have to store it in a house. Right. And then as bankers understand that, and more money understands it, or people in China understand that, another thing, they have to move their money into a hard asset. And a house moves, instead of having its utility value, where we grew up in a family in a neighborhood 50 years ago that was a neighborhood, it moves into a store of value, and it becomes an instrument that is not a utility anymore. So, but why this is so hard to understand is because most people, 99.9% of the planet, is measuring from the system that's debasing. But if you just simplify that, if you say, if Bitcoin stayed decentralized and secure, it is repricing the world. And people ask when? Right now, every day. Right? It's a light switch, because what's going to happen here is a whole bunch of people are thinking they are getting returns at a 10% IRR or 8.5% IRR or 5% IRR in a bond. And Bitcoin has returns of 50% IRR for the last 16 years. And it'll have 15% for the next 16 years. And so all of these trades are losing value against the repricing of moving to the free market.
So Jeff, how do you kind of live your life day to day and make decisions when I'm guessing you're getting paid in dollars, not in Bitcoin? Maybe I'm wrong. But when most of us, I think our paycheck, my mortgage, I need to pay regardless of why I've taken out that mortgage and why I own a house. JP Morgan Chase is not going to look fondly if I try and send them via my crypto wallet Bitcoin payment on my mortgage this month. So how do you kind of translate that, I guess, into your day-to-day life and the decisions you make?
So I was really early on the internet too. I saw that, and I remember the same conversation in the internet. I remember this conversation on, and my parents said, "What are you doing? Right? You're going from this job and you're going to create a business on the internet when there's no business on the internet." And so I really remember what the people thought there versus what happened of a protocol imposing new rules on society. And this is the same thing. So if you ask me specifically what I do, and I'm going to kind of go through this in a layer, because I'm just like you. I'm just like her. We're all people. We all want the same things, and all around the world. You travel to all countries. You actually meet people where they are. We all want the same thing. Better hope for our families, better lives, everything else. And if we lived in an extractive system, what would it look like? And if we lived in a cooperative system, what would it look like? And so I started, when I finished writing my book, I realized I started buying a bunch of Bitcoin at the time I was writing my book, because I couldn't resolve how we could move from one system and all of the fighting that would happen. Because normally what we do to reset the system is go to war, massive global conflict, and then promise not to do it again with the winner setting the rules of the new system, and then start again. That's what. So I wrote the book because I was worried about my kids living in that world and where we were going. And you can see the acceleration to the world that I'm describing, right? In every country around the world, you can see what's happening at the rate of acceleration. And so I started buying Bitcoin, and then I started talking about the same thing I'm talking about here over and over and over again. And it started I've been asked all over the world, presidents, different people, to come in and talk to them about what this looked like. And then I've realized at one moment in this, I was on all these boards in my capital, my wealth at it. I was investing in the Fiat system. And I realized, holy cow, I'm a hypocrite. I'm a total hypocrite, right? Because I know what's happening. I'm measuring from this other system and I can see what's happening, but yet all my time and energy is in this other system. So I'm making the very thing stronger against all interests. Well, I'm blaming other people, but it's me. And I just moved. That's why we created Eco Death Capital, so I could move my time into the system I wanted to see prevail. And by doing that, by then being able to see what's actually happening on top of Bitcoin, the layers on top that is expanding at a crazy rate, I couldn't believe what I actually saw by just flipping all of my time into that. So if you ask where I get paid right now, I get paid a bunch in Bitcoin. What I think it looks like is if you were in Argentina in 2000 and you could move your money to Google in 2000, and the Google's balance sheet was instead of in Argentina pesos in US dollars, You would have the growth company plus you would have the difference in the currency. And my version right now is every other person other than people measuring in Bitcoin are living in Argentina.
I want to dwell on kind of like some practical parts of that. Like, well, as a company that puts Bitcoin on the balance sheet, I mean, it has a certain, significant effect, and maybe we'll get to the company side, but maybe to make it understandable, folks, you and I both live in kind of various forms of the Bitcoin standard. And I think questions people will often ask is like, okay, well, if I do move more and more of my individual capital, or like, how does it actually work, right? So if you're in El Salvador and you actually are receiving, your Bitcoin for the pupusas, and you're living in that, like, what happens during the fluctuation? So there's sort of that set of questions that generally happen. For me, there'll be questions of, okay, well, like, if I'm getting paid in my salary in Bitcoin and it's deflationary, does that mean my salary goes down, right? So there's a bunch of like practical questions that start happening when people actually go, wait, you get paid in Bitcoin? Wait, you live on Bitcoin? How does that work?
40 years ago, 39 years ago, I worked as a lifeguard, my first job, right? And I got paid $16 an hour. I was 16 years old. I was $16 an hour. When my daughter was 16 years old, a couple of years ago, she made $16 an hour as a lifeguard. What would $16 an hour buy because I bought my first house just after that, right? You think she could buy a house? And so when you understand what that looks like for people, that you're picking their pocket because wages are sticky, right? Now reverse that, put it totally 180 on its head. That means wages are sticky going down too. And so because people don't want to get rid of their employees and they don't want to negotiate to bring down their price, it means a massive increase to the middle class. But prices will come down, because what ends up happening is, from that system, instead of working two people 80 hours in a week, we used to be able to, at least in US and Canada, we used to be able to have one person working, and the other person stay at home and raise the family. But because of this, now you had to have two people working, and a lot of times two people working each two jobs and trying to do everything, and they're just scraping by. And what is that? What happens to their kids in that environment? What does that look like? What is the society decay in that? In Bitcoin, you'll be back to one person working, and then because prices that should fall naturally and actually get faster and faster deflation, then that person will be working 20 hours a week, and then 5 hours a week. And then, and they'll get richer the entire time, because the natural state of the free market is in service to them.
Yeah, I think one of the points you're making, right, is there's this kind of famous slide that like corporate wages, like, since the 1970s have gone a certain direction, and then like our corporate profits have gone, sort of up into the right since the 1970s, and then like wages have roughly been flat, which means their purchasing power goes down. So like, do you
Yeah,
imagine?
that depends though, right? A lot.
Yeah, I mean, that's
Where
not a
you sit
controversial slide, but I
in
mean,
that
it is
organization,
circulated
right?
around the internet.
CEO purchasing power has gone up pretty substantially over that period. I think if you're
Well, yeah, I mean, that's
right,
part of what I was getting at
yeah,
is like, the the power dynamics and the wealth inequality have clearly, the bars have gotten wider. And so what I was going to get at with this is, do you actually think wages are so sticky? So somebody who's paid 1 Bitcoin will continue to get paid 1 Bitcoin in this world, right? And their purchasing power goes up, or does it go down over time? And this is the mental part that's really hard. I've like, when I talk to people that ask me about this, they're like, wait. So maybe my absolute income in terms of Bitcoin go down, but then my purchasing power with that absolute Bitcoin goes up. Like, that's so hard to wrap your head around.
That's why this state change is so hard. That's why I use the Galileo example. We'd laugh because those people, how couldn't they know this? But to them, it was very real. It took 325 years for the church to say Galileo is right. So it seems from the system that it's really hard. And so I empathize with people that are going through this, but there's no way. Here's why the free market won't allow you to pay the one person who want 1 Bitcoin a month for forever, because the wage would be so high that other competitors would offer for new competitors would offer the service for way less, and they would destroy your business. The interesting thing about Bitcoin is every person who's tried to cheat it or trade it or create another coin to it and move all
Gets
their wealth to it
wrecked.
gets wrecked, which is really interesting because but that makes sense because we've always lived, all of our thoughts and actions are all the last 5,000 years of human history, the winners extract more. We live in a system that all of the winners in your media and everything else that keep you fighting within the system extract more from you. Of course, they want you to stay in that system, right? Of course. And this is a cooperative system that doesn't care what they do. They can't break it. And the more you do that cooperates, the more you win. But we've never lived in a cooperative system. We've never lived in that. So it would challenge every thought we had.
One of the things I'm a big believer in is like this notion that what it does is it actually drives more real GDP. Like, so there's like this notional GDP that's like potentially inflated, and then versus like us that are makers that are building real things in the real society, which actually should have like improvements to society and costs should go down. Like that's the concept of deflation to me. And then I think one of the things we've alluded to but haven't touched on is the next question I get people asking around that is, well, then does credit work in the society? So if like if we're incentivized to actually build and then ultimately save our assets, which is what part of the incentive structure does in this cooperative as you're describing, then people kind of go, oh, well, if the system's not juiced, does that mean credit doesn't exist in the system? And like, can the economy grow faster?
Yeah, I get asked the same question all the time, Andrew, which is the credit underlying the existing balance sheet of the world when I wrote my book was 185 trillion. 250 and 185 trillion of that credit came in the preceding 20 years. So as the faster, remember this, productivity growth is deflation, right? So the faster productivity growth, forget GDP, faster productivity growth is deflation, faster deflation. So when people talk about productivity growth and increasing prices, it's like, how could you say those two things in the same thing, right? Because the productivity growth is leading to faster credit growth, and it's exponential because productivity growth is exponential. So the other side of the ledger has to capture that productivity growth at a faster rate. So the 185 trillion that came within the preceding 20 years, you knew it was going to happen. It was going to accelerate because the productivity growth of AI and compute and everything else was exploding around the world, and it had to capture it to keep that system in check. So it had to concentrate it. Government had to get bigger. Individual rights and freedoms from the centralized control system had to go away because it was a centralized control system. And I predicted in that book what it would be 5 years later. And because you knew it was exponential on both systems. And today we have $400 trillion of debt underlying that balance sheet. Now the $400 trillion of debt, if you paid back, that's in another 5 years, we've added that much more, right? That's not the unfunded liabilities. And let's just say it for what it is. The debt is insolvent, right? If you tried to pay back the debt at $1 a second, it would take 12,873,000 years to pay back. It's already insolvent. The people that believe it's solvent are letting their wages get stolen in it at an ever-increasing rate when all they need to do is move their time and energy to Bitcoin. But a lot of people will stay stuck in this. If the debt is insolvent and the total asset value of every single thing in that is 900 trillion global wealth, you could say that's our perceived wealth of the world, right? If you own a home and even if you have a mortgage against it and you have that gap, you think you have that money, right? But if the debt is insolvent, and nobody will allow the debt to go insolvent, but if the debt is insolvent, then the 900 trillion isn't worth 900 trillion. Your house is worth almost nothing, right? If it all failed, it would be a complete collapse. Every bank would collapse, everything would collapse. So what do? We pretend it's solvent and we add more to it at an ever increasing rate.
Maybe like a practical part of this is like what Bitcoin's role could be in extinguishing the debt or bundling with debt, right? And that's true at the individual, corporate, and maybe even nation state level, right? Like, so if I'm holding Bitcoin in my balance sheet personally, and then I'm buying things with my credit card, like my ability to back an increasing asset actually gives me leverage. MicroStrategy is clearly doing it at the corporate world. And then, you and I know Senator Loomis and other folks that are, thinking about this at the nation state level. So like, how does bundling an asset that's hard money like Bitcoin potentially impact our ability to service a debt that right now, like the debt service alone, is a significant impact on GDP?
Yeah, well, look at El Salvador as an example, right? Their bonds have been upgraded, I think, 2 or 3 times since they put one Bitcoin a day on their balance sheet. That was all. It's really simple. At the same time, U.S. bonds have been downgraded twice at the same time. So what's happening is Bitcoin is healing the debt. It's removing the debt in El Salvador. They think they're going to be debt free in 2029. Their bonds are now trading at par, right? They were 23 cents on the dollar 4 years ago. It was going to go insolvent, IMF again, and they said no to the IMF, and they said we're putting Bitcoin on the balance sheet. So what is
IMF didn't like that, if I remember right.
exactly, because it's a control system. It's not it's so the debt is being repriced. It's going away, right? It's the same thing if you own Bitcoin, right? If you owned Bitcoin at 10,000, right, and now it's 96,000, 98,000, whatever it is, and you had a bunch of debt, you could retire the debt. It's the same for any single person, any single government, we believe these governments because the governments have gotten so big by extracting more and more. Governments they're supposed to serve us. Now they prey on us by extracting more, right? And we believe that system is normal because it seems normal to the system we're measuring from. It's not normal. It's not normal at all. And so you don't have to wait for your government. You don't care.
Yeah. And I mean, you're seeing that in the circular economies, right? Like you and I have been in Madeira and other places where, there's both at the institutional leader level conversations going on, and then at the grassroots. And this is actually the most interesting story part to me, and even El Salvador or Madeira and other places. Like it actually started from the bottom up. And then, the constituency actually drove some change at the leadership level.
I was a big part of that. So somebody who actually a Twitter follower asked to publish my book in Portuguese. We became friends. He asked if I would help with the president understanding Bitcoin because it was important in Madeira. I went over, then the president came over to Miami, and we said we'll build a bottom up structure here. And that's all that happened in the Bitcoin conference, and it was only in March. There were, I think, 25 businesses accepting Bitcoin in March, and it was wild. But more and more Bitcoiners moving to Madeira, and this circular economy expanding. It's wild how fast it's accelerating, and as it's accelerating, more and more people are moving there and taking advantage of it and going and spending their Bitcoin there. And so when I watch this happening around the world, and as you do too, Jeremy, and people say it doesn't have utility and it can't trade, when there is a peer-to-peer economy growing on top of Bitcoin that's growing faster than the internet, okay, well, it might not for you, right? But that's not true for around the world.
One of the other, sort of things I hear a lot is, okay, I'm starting to wrap my head around a savings technology, but then okay, I'm just gonna hoard it forever. Does it can actually be used in the real world? So it's really fascinating to me. In the first world now, there's a tipping point where people are like, okay, I'm starting to understand it as some kind of asset that's some kind of, capital. But then there's another thing happening in the emerging markets and other places where actually it's being used in the real world. And that's also mind blowing. So maybe the kind of final segment as we wrap up is just you invest in companies, right? So you said you've gone in and all in and just living on a Bitcoin standard, but you also, as somebody who's been an operator and then an investor, sitting in both Megan and I's shoes in different states, there's a lot of really interesting work happening kind of at the frontier, the bleeding edges to me in this space that I don't think is as well known in Silicon Valley or in other sort of traditional tech circles. So how do you think about company investing, and, sort of where the areas of opportunity are beyond just, huddling?
We have a very narrow mindset because we see Bitcoin as a protocol, and that means it's developing in layers, and that means you don't need another token or anything else to be able to integrate with it, and it's all interoperable. And so it's moving faster and faster and faster. And it doesn't take a developer to build this other kludgy coin with a bridge or anything else to be able to use it. It just is, and so that means the cost is so much less for the developers that are building onto driving an API into the protocol. All the wallets interconnect, and it's moving faster and faster. Well, there's a whole bunch of belief because tokens are still, they can have a token and then make a bunch of money on the token and sell the token and everything else. Well, there's a lot of belief that that's a real return. I don't think all of those are going to zero. So because it's native into the protocol. So how do you have to think about that? You have to think about whether companies that can deliver enduring value into something that is going to free. Right, a lot of this stuff is going to free or close to free, and so you have to construct companies differently. You have to construct the teams you're working with have to be different. It's so different than the venture world that exists today, right? That I took money from, I was part of, I understand, and then to move your head over to what this looks like. One of the companies we invested in last year at this time was an 18 million pre that was doing in trading volume about 30 million a month. And tiny margins, but it's all in Bitcoin, right? And there's no counterparty risk because it's all in Bitcoin. People don't even know about this company, and it'll do $1 billion this month in trading volume. And so the rate of growth of the things we're seeing and the construction of what this looks like is so crazy, but not even the rate of growth. In the old world, you go Series C, pre-seed, seed, Series A, B, C, D, hopefully get public. And a lot of times those companies still wouldn't be profitable. There's 3 portfolio companies in a fund that's only 2.5 years old that are already profitable and growing at this rate, and they're adding Bitcoin to the balance sheet each month. Like, it's actually remarkable how effective and why should it be? Because we're measuring from Bitcoin. We're measuring in something that doesn't cost the same to be able to achieve profitability. And they can achieve amazing growth in there. So it's a real different mind shift. And then the depth of what I'm saying here, if you're trying to get to this mind shift from the typical TradFi or everything else, where you see all of the tokens and everything else, we see some of that, but we can't see, like, the valuations are insane on some paper that is 3-5 years away from maturity, that then by the time they get even close, Bitcoin's going to take it all. Right? It doesn't need it. So, I know I'm being pretty harsh in that view, and a whole bunch of people in your broader area will come after me for it, and that's okay. But I would rather debate that view, right, and go down to the sand on that view on why, than just leave it out, because I think it's that important. I think that's what's happening.
Jeff, this has been an awesome conversation. Thank you for coming and chatting with us. We've mentioned your book a couple times. Can you tell folks, where's the best place for them to find it? What's it called? Where can they find you and learn more in general?
The Price of Tomorrow: Why Deflation is Key to an Abundant Future. And you don't need to buy it. You heard everything here anyways. But it's on Amazon.
What an awesome talk, Jeff, man. I think we could talk for hours, but I think we unpacked deflation. Maybe next time we'll cover more on Noster, which, I think you and I are both super interested in what's happening in that protocol, and, capital formation and funding companies, I think in the Bitcoin space is an area I'm super interested in as well. But man, I learned a lot. What just an honor to spend some time with you, man. And we'll catch you next time, brother. This is another episode of reDeFined. Catch us on all those places, some of which Jeff's on, some of which aren't, on YouTube, Twitter, and Spotify, and all those other places. So thanks, guys. We'll talk to you soon.